Did you see the size of that candle? Just take a moment to appreciate it. Just take a moment to look at it. And I want you guys to understand that it's often in these moments of the market when traders lose the most important thing, the thing they most need for their continued success and profitability, which is patience, discipline, and a plan for whichever way the market goes. In other news, we're going to be looking at the recent allegations of exchange fraud surrounding hitBTC and a plethora of other things in today's exciting episode of Breaking Bitcoin.
Hi everyone, I'm Naomi Brockwell for NBTV and this is Breaking Bitcoin.
Welcome to another exciting episode of Breaking Bitcoin with improved audio quality from the last test stream. Hopefully you guys are doing absolutely fantastic. This is your daily source for market updates, news, and sentiment for professional and retail traders. I'm Justin Wise, lead analyst and senior mentor at Kraken Cryptocurrency. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from. Big shout out to all of our fans watching from across YouTube, Twitch, DLive, Facebook Live, and of course on Roku with the Investor News Channel app. Make sure to support the show, guys. If you appreciate what we're doing, you know how to do it. All right, before we begin, if your goal is to become a full-time professional trader, or you want to earn active income on the side, or you just are tired of places like Fidelity, managing your portfolio, you're uncertain about the future, and you just want to take control of your financial independence, we're here to help you grow. You can check out everything that we're doing on the website at premium.krakencryptocurrency.com. We are the fastest, very proud to say that, the fastest growing trading and education group in this space on the interwebs for a reason. All right, we've got such a great show for you guys today. I don't even know where to start. I do know where to start, of course. I want to start by clicking that over there. I want to start by talking about the fact that most of us in the trading game, especially in cryptocurrency, are going to be managing multiple accounts, multiple exchanges, and this can quickly become a headache and a hassle. Our friends over at Coygo have developed a turnkey solution that is completely free in its current beta testing phase, and I invite you guys to go check it out, try their platform out, and see what you guys can do with it. Help them make their platform better. Highly appreciative for them sponsoring today's show, and a word from them before we get into today's video.
Do you trade cryptocurrencies on multiple exchanges? Coygo is here to help. View real-time insights, including trade analysis, order book superiority, arbitrage scanning, and more. No API keys required. Want to trade, transfer between wallets, or track your portfolio across exchanges? No problem. Just connect your API keys. They're only stored securely on your machine. Coygo servers never have access to your cryptocurrency accounts. Sign up now at coygo.app.
You guys can go check out our friends over there at Coygo, COYGO.krakencryptocurrency.com. As I said, it's completely free to use. Don't have to pay anything. You can utilize their application on your desktop. We have played with it and we quite like it. So we don't get anything from the link. There is a link down in the description. Just helps track how many people click on it so we can see if it's a good fit, if our viewers can help them make the platform better. Coygo.krakencryptocurrency.com, guys. Now, I want to thank today's Crypto Comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out, spectresecurity.io, for all your security needs. Now, let's do what we always do. Let's give away some free crypto to whoever has the best crystal ball. And let's get into today's price because this market is amazing today. This market is absolutely amazing, and I want to break it down. Let's go, guys. All right, so here we go. That's the right show. Get a nice little refresh going on here. The problem with live TV, my friend, yes. All right, yesterday's show was Bitcoin carnage continues, is all hope lost? for 2019. And our Ethereum whales dumping their holdings. Make sure to go check out yesterday's show. It was great. Thank you guys for all the comments in here. You guys are absolutely fantastic. And just to verify, as we do, let's go check out Coinbase's chart. And we are going to flip to the 1 minute. And got to go back a little bit further than normal. And 12 o'clock. We opened up at... Oh, did you just flip me? There we go. We opened up at 68.66. So whoever has the closest prediction to 68.66 wins the cherry pie today, guys. Let's see what we got here. All right. So we've got 6,400, 66.11, and 66.55. Oh, 66.72 coming in from Ben. All right, Mr. Ben. That makes you the winner unless I missed something. So make sure to get a hold of me in the Discord and I will tip you some crypto, my friend. All right. Here we are on the 1 minute chart as we usually do. Of course, we don't do that. Let's go to the daily. And we've got a lot to talk about. You know, I was very, very, very good morning. Very good morning. Got to talk to my analysts, really develop a concrete plan for this area of the market. Well, you know, of course, just commenting on the plan that we've already had. In the trading world, you do have to be able to respond quickly to situations. So giving you guys an update from where we were yesterday. Yesterday at the daily close, as I said, it was actually a little bit before the daily close. Shortly, it's a couple hours after the stream. So about an hour before the daily close. An hour before the daily close, we did take half of our full risk short position off. Okay. And then this morning, we did take the rest of our position off. So we are not in a full risk short. I am not in a full risk short. Of course, individual traders in the group are going to be following their own strategies that they've built and trading with their unique nuance as well. But as far as the recommended trades or the setups that I'm taking, because all I do is, not all I do, but what I do for the members of the group is they're able to track all of my trades in real time. And so I am no longer full risk short. Now, we've got a lot to talk about today. And I think this is a really good opportunity to talk about multiple topics in the realm of analysis. So give you guys an insight into the long analysis that I posted this morning, talking about supply and demand, right? And understanding supply and demand concepts. So let's start there before we really get into price or what price is doing, which is interesting. But more important is understanding the framework in which price operates. So I added in, and also with labels so that we can reference these in the future to help keep me accountable and also give you guys more nuance and understanding of the way that I look at the market. So supply and demand is very, very important to me in cryptocurrency, right? And levels of supply and demand help influence my decision in the market, right? It is a piece, it is a tool that can be utilized with other forms of my technical analysis that allow me to make better informed decisions, better strategical decisions about when to buy and when to sell, which is what it comes down to be profitable in the market, right? When to buy and when to sell is what it boils down to, right? But it is more than that, right? It does boil down to what you do in the order book as far as your profitability. But what influences those decisions is your overall framework in which you approach the market. And that has to do with having a plan and sticking to it. So taking the time to analyze the charts, marking out the levels in advance that you think are important, and then only utilizing those levels or changing them on a regular schedule, not changing because you saw a candle, not changing because you heard something on Twitter, not changing because you got afraid or you got greedy. You don't change the levels of the market that you think are significant that you have determined. And typically this is always best done on a higher time frame. So we are going to go to the weekly to start off today's analysis because it is going to be a little bit cleaner for us to see here. Okay. So I've marked out the 4 significant levels of supply and demand on the chart. Now we can obviously go higher, but I wrote several paragraphs about the first level of supply, the overhead level of supply, currently between 78.57 and 83.31 again on the Coinbase chart. So make those minor adjustments. And yes, before you ask, the answer is yes. Those levels are not razor sharp accurate. That's not the point. They're not intended to be, and it is impossible for them to be there. So instead of 78.57, your bottom level may be at 78.62 or 78.79 or 79.01. doesn't matter. The area is what's important, right? Now, for discretionary traders, these levels are extremely important because what you will typically do with as a discretionary trader is you will have a setup that you look for when price goes to that area, right? So, for example, let's take today's price movement, for example. We have a level of demand between. Let me make sure this is okay. Between 61.26 and this the beeping is a little slightly annoying. The 6,600. All right, so 61.26 and 6,600. Right, level of demand. So a discretionary trader would look for example, maybe a tap into demand or for price to come into demand, and then look for potentially price action to turn bullish before looking to take a long. Right. Conversely, when we have a level of supply, a trader would look for a test of supply and then look for price action to turn bearish before taking a short. For example, that's a potential type of setup, right? And for discretionary traders, it's important to mark these areas out on your chart objectively as you can with your analysis ahead of time, and then not change them, all right? So that's step one of what you need to be a successful trader, is developing a plan, right? An objective plan. Define rules of how you define levels, for example. And for myself, these levels are created through the use of the volume profile, right? I find the volume profile the best method for determining horizontal supply and demand levels in the market, because you cannot fake that, right? So for volume to be created, actual transactions have to be accrued or occur in the order book, right? So levels of supply. So for those of you who aren't familiar with the volume profile, many of you are, of course, the volume profile is this indicator right here. Now, I actually did use a fixed range for this, right? But you can see how I've mapped out with my lines on the chart, which hopefully you guys can see quite clearly. And I'll go ahead and take the developing value area off for right now. All right. So we just have the volume profile. Now, what the volume profile is monitoring is volume by price instead of the volume indicator at the bottom of the screen, which is volume by time, right? The volume indicator, the traditional volume indicator, is measuring when volume came in and how much. So there will be a bar that corresponds to this day, and depending on how much volume was transacted on this day, that bar will be a different color or higher or lower. As opposed to volume by price, which is the volume profile, which just tells you how much volume was transacted at this level. And so what we can see with this tool, we can see where sellers actually step into the market and where buyers actually step into the market, and likely areas of defense. So it's important to understand that most individuals tend to think that the market moves randomly or via manipulation. And although that can be true, these things aren't mutually exclusive. The market moves through the psychological decisions of market participants, i.e. active traders, right? So when we look at, let's for example, let's just go back in history a little bit, and let's look at this area of the market right here. We'll take volume profile off, and we'll just look at this area right here. We've already looked at the zoomed out version, and we can see that this was a level of supply. So we know that there was a lot of volume transacted at this level. And where is price right now in relationship to that level, to that high volume node cluster or level of supply, as I'm labeling it, right? Well, it is below it, right? It is below it significantly, right? This is the weekly time frame. It is significantly below it. Now, why is it significantly below it? Okay, this is a simple question, and the simple answer is because a lot of people sold there, right? A lot of people sold there. And because in Bitcoin, the derivatives markets move price, the derivative markets are king. And now that we can short sell and long Bitcoin in particular, which is what we're talking about here, what we know is that is an area where a lot of traders, where a lot of volume was entered into short positions, right? So that is going to be for anybody that holds the long, from that level. Let's say that price moves from where it currently is right now to back to that level of supply. Well, picture the psychological decisions that you would make. If you had a position that was open, that was short from, let's say, 8,000 or 7,800, and price is currently sitting down around 6,800, and you're feeling very comfortable, right? You're sitting in very nice profit. Well, all of a sudden, if you see that profit begin to go away, if you see price start to move up, what decision are you likely to make? All right. Now, we have to understand that the largest positions are going to be opened up by more experienced traders, but that's not always the case, right? There are individuals that are completely reckless with trading that do tend to get their hands on large amounts of capital. And we also have BitMEX and other platforms that allow you to use very large amounts of leverage, which people tend to abuse in cryptocurrency because a large amount of individuals that are trading cryptocurrency are amateurs. So they're not very seasoned, they're not very professional in their trading, right? Which is the case in almost all markets that are tradable, but particularly so in cryptocurrency, right? Seasoned traders who have established larger positions, larger capital, are going to have a plan, and they stick to that plan. Traders like myself and other professional traders. So the way that the dynamic typically works, and it's important for you guys to understand kind of the psychology behind this, is when price retraces, if price retraces to a level where lots of traders have established short positions, well, you're going to see weaker hands exit their positions as they see that profit start to diminish. They're like, okay, I'm just going to get out with some profit. Screw this. But more seasoned traders who are saying, you know what, I established a short at 7,800 to target 4,900 or to target 4,000 or to target 3,000. Price is not going above my entry. Right? Nobody wants price to go above their entry on a short. Nobody wants price to go below their entry on a long. But what larger capital traders can do that smaller capital traders cannot is they often have excess capital in supply, right? So it's very, very rare that these traders go all in on trades. The professional traders never go all in on trades. They position in, right? They position according to their risk. They evaluate risk for every single trade because that is the most important thing. So what that means is that if price retreats back to their entry level, what they can do is they can sell more. They can put on more shorts. They can try to shove price back down, right? And so you end up having this battle of attrition between buyers and sellers at that price level. Because of course, there are going to have to be buyers in the market in this scenario because there have to be buyers to push price from where it currently is right now back up to 7,800, 8,000, right? And so what we will often get, what we always get at that level is almost always a battle of attrition, right? At significant high volume node clusters or significant levels of supply and demand, we get significant battles of attrition. And this forms consolidation. This looks like consolidation. This looks like ranging. This looks like chopping, right? Now we can get swift rejection, which is good to see for the sell side in the scenario, right? So if we see price go up to 7,800, 8,000, and we see a big red rejection candle, that's a very bearish sign, right? Because that means that that sellers who have established themselves at that price level are very firm in their position, and that buyers did not have the strength to push them out of their positions, right? And this is often why we see short squeezes, right? So for example, if price does start going above that, you will see shorts begin exiting in mass because they feel that their trade has been invalidated. And often we can get wildly volatile price movements because of that, right? Which often revert to the mean, and then a trend is established. That's typically how that works. So I wanted to kind of cover the psychology behind that. I thought that was important, and I'll start breaking down these levels. We'll go over these more kind of as the weeks go on, because I think understanding and having these levels on your chart can be helpful. This doesn't directly influence the primary way that we're going to put on trades, but they're discretionary levels, especially I know a lot of traders watching are going to be discretionary. And so I do want to do everything in my power to give you guys the best knowledge, the best education that I can for navigating these markets. So let's talk about these two levels right now. And I kind of want to talk about what I think that most individuals are going to be looking at, and then we'll kind of go down to the time frames and look at kind of what the day presents itself. So obviously we have a very nice buy candle coming out of this area of demand, right? Not a big surprise to anybody. Obviously the size of the candle's pretty impressive, I'm not going to lie. And discretionarily looking at that, we have seen this kind of behavior from Bitcoin before. Typically when we tap into a level of supply, or excuse me, when we tap into a level of demand, we often can get a pretty explosive reaction. As I said, we did end up closing our full risk short. Now, let's lay out the different scenarios, right? Because we don't know which way price is going to move. Nobody has a crystal ball. What makes us successful, profitable traders is having a plan for when price does things and then executing, right? And being consistent in our execution at all times and over a wide series of trades, statistically taking more winners than losers and ending up profitable net at the end of the month, at the end of the year. That's how trading works. I really want to, it's firm. I see this a lot on most other analysts that attempt to convey education. And the reality is that there continues to be, and there will probably always, but it has for a very long time, particularly here in cryptocurrency, this idea, and they sell this idea to to people who watch their channels or their shows or read their Twitter posts or whatever, that trading has something to do with being right. That being profitable in the market has something to do with being right. And I am firmly here to tell you that having done this for many years, it has nothing to do with being right. Profitable trading has nothing to do with subjectively being right about price movement, right? This is why what we do in the group is we educate individuals on how to build technical-based strategies, how to test those strategies, and then how to deploy them into the market. We teach them how to have the correct psychology. We teach them how to have the correct discipline. We teach them how to schedule their environment correctly, how to schedule their time, how to create a working environment, right? We provide the tools for them to do that. We provide the indicators for them to do that. Because we actually, shocker, we actually want to see people succeed. That's what I want. I want you guys to be profitable. I don't want to be right. Okay? And that's the invalidation of ego that almost all successful traders achieve, given enough time in the market, right? Eventually you learn that this game has nothing to do with being right or wrong. This game has to do with making money. That's all that matters. You either make money or you don't. Doesn't matter if you were amazingly right about a trade or price movement or direction or support or resistance or trend lines or anything. Doesn't matter if you were amazingly right. All that mattered is, were you able to make money, right? So this idea that I think that individuals can be incredible analysts but terrible traders, I think is nonsense, right? Because all that matters is, are you able to make money? Because typically when people say that, when people say, oh yeah, I'm a good analyst, but I'm a terrible trader. What that means is that you're okay with the technical analysis, right? But trading has more to do with discipline and psychology and strategic planning than it does with technical analysis, right? You can have the best technical analysis in the world, but if you cannot execute properly, you're not going to be a successful trader. If you do not have patience, if you do not have discipline, if you cannot control your ego and invalidate your ego and push forward knowing that it doesn't matter if you're right or wrong on this trade, only matters if you make money. And it only matters if you make enough money consistently over time. That is the journey that you guys will need to go on, and many of you are already on in this world, in this trading game. Okay, so that's a lot. Sorry to hit you guys with all of that, but it's absolutely necessary. You know, this is what I want the focus of this channel to be, to covering the topics, to covering the nitty-gritty of trading that other channels don't cover, because most channels are not actually real traders. So let's see, guys. So here are the things, looking at this area of the market, that I think most analysts and most traders are going to be looking at, right? So obviously I want to point out the tap into demand, right? So for discretion, I think that a lot of discretionary traders would be looking at this area and saying, okay, we've tapped into demand, pretty nice reaction, pretty nice bullish reaction from that. I think a lot, and we saw a lot of volume come in. That's the other thing that I do want to point out, and why I'm going to be saying some of the things that I'm going to say is that, you know, volume doesn't lie. And we saw about $1 billion worth of longs come in there. So that's pretty impressive. It's a lot of buyback, right? A lot of buyback. And again, a tap into an HVN. So a lot of these things make sense. Other than that, there's nothing else really on the chart that impresses me about this price level. It's just the level of demand. It's our current significant level of demand. It's a high volume node cluster, a likely bounce target, a likely bounce area. So that's fine. And before you guys are quick to maybe run into the comment section and say, you were just bearish yesterday and now you're talking about bullishness, just wait. Hear the whole analysis. There's a lot here. But again, it's a likely bounce target. And we do have a couple other things. I want to look at some, the big thing I think that a lot of people are going to be talking about is a lot of traders use RSI. It's one of the most popular indicators out there. We do notice that RSI is not a terrible indicator for cryptocurrency, because when it does go oversold, it is a pretty good indication of local bottoms, right? Now, again, remember here, though, the earlier concept that I referenced. This is technical analysis, and technical analysis has less to do with actually making money off of this than discipline and psychology. So that's what I want to instill in you. I'm going to give you the correct technicals to have a picture of what to do in the market, but I also want to instill you with the life skills necessary to actually make money from this stuff, guys. All right. So RSI went pretty oversold over here. And we did get a significant buyback back around on the 21st of December. Now, remember, as an objective indicator, I haven't found anything other than RSI for an initiator, for example. So as the objective signal indicator, then RSI going oversold and then coming back up. RSI itself being oversold, price, any indicator can remain oversold for a very long period of time in a pronounced trend, right? But the daily RSI for Bitcoin is not terrible for helping you identify local bottoms or local tops. It's better for bottoms. It's actually less good for tops for taking discretionary trades. Not my active recommendation, but I know that a lot of traders utilize this, so I want to comment on it because we do have something that I just cannot stop hearing enough of, which is, of course, if we take a look at RSI here, bullish divergence, right? So bullish divergence is technically when price is making a higher low than it previously did, or excuse me, when price is making a lower low than it previously did. So price made a low, bounced up, makes another low, lower, okay? Yet your momentum indicator here, your RSI, which is measuring average or relative price volatility, price momentum, is making a higher low, indicating that there is weakness. What this means psychologically is that there is inherent weakness in the strength of the sellers on this latest push, relative to the pushes that have occurred previously, right? If it was a more pronounced push, then it would be a lower low on the RSI or on many momentum indicators do oversold. Time transformation is a very good example. So we could be talking about time transformation, but generally only followers of this show are familiar with that. It does overbought, oversold way better in my opinion. That's how I programmed it. Not only, it also does divergence way better in my opinion and gives objective trading signals and is, anyways. I digress. You guys can check it out at premium.cryptocurrency if you want. It's our second most popular indicator. Actually, probably our most popular indicator. It's probably more popular than MIX, I would say. I think more people actually use TT than MIX. So anyways, so a lot of people are talking about that. You have a lot. It seems like all of crypto Twitter went long. Just say. Okay. So there are, in my opinion, the only relevant bullish factors, right? Looking at your popular momentum oscillators, we're oversold. We're recovering from being oversold. There's some bullish divergence, and we're tapping into a level of demand that's that is a significant level. I mean, because below this, let's go back to that weekly. And let's look at these levels, guys. I mean, obviously there are more. And again, keeping your chart clean and objective, you can see that I only have 4 levels on my chart, and I haven't even. There's really nothing up here that's of import, because getting up to here, we're just trending and we're riding trends, and we're just looking for exit signals to exit, right? So, again, up in this range, then you're just go baby go. Anyways, whereas the reason why there are levels of supply and demand in this area, and I've talked about this before, this is a little bit of a more zoomed out approach to the volume profile, is because there's a fairly shallow, there's fairly shallow volume here, all the way from 1,000 all the way up to 3,000. And there's fairly shallow relative, you can see it's just low volume nodes all throughout here, right? This is just seller's territory, right? And so there's not really supply and demand up there, right? There's not really supply and demand up there. Nothing that is relevant to trading. So where we are in Bitcoin's price is a very wide range, right? We were below that fair range in November and December, later end of November and December, and leading up into the Q1 of 2019. And then in April, we broke up into the still kind of below the threshold range. But again, between the areas of around, it kind of really depends on how you look at it, right? Between roughly the areas of 5,700 to about 9,000, I've talked about this before, is what I would consider the fair market price of Bitcoin, right? And what we saw in 2017 was a very large overreaction and a lot of bullishness, and we can see that bullishness continue. If this thing decides to run, it can run. Again, I've talked about 6-figure cryptocurrency and 6-figure Bitcoin before. Can absolutely run. Trends are a real thing. We don't know what might provoke that, right? Global adoption, fascism, totalitarianism, a dollar crisis or a fiat crisis, a massive wide interest in decentralization and privacy. We don't know what will occur in the future, right? We know what Bitcoin represents and we know what it does. So the reason why there are more relevant tradable levels, right? Rather than kind of the nonsense that you'll see on a lot of charts, like lines everywhere. The reason why there are more tradable levels in this area of Bitcoin, where we're currently at right now, for example, is because a lot of volume's been transacted here, right? Prices turned around a lot in these areas, right? And so we can utilize that information to discretionarily help make our trades better in the future, if you are a discretionary trader or allowing discretionary trades into your system. Now, I always say this: if you are not a profitable trader, then you should not be a discretionary trader, right? I think that you should first build your objective technical strategy first, which is the first thing that we do in the course. That's Pathways to Profit. Build that so that you have this underpinning of consistently profitable trading. It will also teach you the discipline that you need. It will teach you the strategy building that you need. And then when you have a baseline of profitability, then you begin expanding your skill set with discretionary trading, if you want to. A lot of traders just will figure out how to automate their process, set it and forget it, right? And that's fine. But for those who want to be more active or more professional, I think, in their trading, they will be looking to apply discretion in certain areas. Again. Okay, so let's take VPVR off and let's get back into, man, it's almost 1 o'clock. That's right. We did kind of do a lot. When did we restart the stream? Oh, well, we'll just go, guys. We'll just go. It's going to be a good stream. That'll be my apology to you guys for fouling it up. Okay, okay, so as I was kind of leaving off, nothing really significant down in this area, as far as besides the fact of, again, I think some of the kind of meme indicators, and the level of demand. It's pretty much just the level of demand. The level of supply is more interesting though, because again, we have that same high volume node. And I want to point this out because I talk about this all the time, and it's not all the time. It only occurs rarely when it does occur. And so I'm going to pull up in my exponential and simple moving averages here. Now, you can call it what you like, right? I use the 13, the 21, and the 55 EMA, have for a long time. I utilize them still discretionarily in conjunction with the regular way that I trade with PTP anyways. And I think they are some of the best tools for having clear-cut decision-making on all time frames, right? I think that EMAs become less usable the lower to the time frame that you do. And then you're just kind of better off to have some sort of price action strategy. But on higher time frames, they are majestic. They are majestic birds, right? And for that very reason, again, just look at the weekly 55 exponential moving average here, for example. Supporting a price, broken through, confirmation of a downtrend, retest for resistance, and rejection to where we currently are. Oh, I guess the other thing that I do want to point out is the chart pattern, right? So obviously what we're seeing with Bitcoin coming into demand right now is what people are going to be calling a double bottom, right? So we have bottom, and then people are looking for the double bottom. Now, according to Bulkowski's chart patterns, you would actually need the neckline of that double bottom to be broken before looking to take a breakout trade. And we'll come back to that. Remember that, right? A double bottom does not necessarily mean there's three types of trades, right? Well, hold on. We got to ease into all of this stuff, right? We got to ease into all of this stuff. And I think I was on the right track here, talking about the EMAs on the weekly. Okay, so we are below the secondary baseline on the weekly. What does that mean? That is further confirmation that we are in a bearish trend. All right. We are in a bearish trend. Okay, guys. We had a long period of distribution. We broke down from that level of distribution, retested supply, and rejected. Okay. We're in a bearish trend, guys. And so there is a difference. I will make the argument here that this represents, at least for now, maybe for a couple days, a local bottom for BTC, right? I'll say that with small conviction, right? Because of what I'm about to say now. There's a difference between a local bottom and a market bottom, okay? So, trend following traders or traders who only want to take the safest, highest statistical probability setups, trade in the direction of the trend and never counter trend trade. So we are in a bearish trend. Not only Could one have determined this through the use of price action by saying that, okay, we had a bullish run, a period of distribution, consolidation. Well, we had a period of consolidation, unclear whether it's reaccumulation or distribution per Wyckoff theory until you break up or break down from it. But as we can clearly see, here is the distribution. Here's the consolidation. Not sure which way we're going to break. And then we decisively break down on this candle. I'm pretty sure we've confirmed this is distribution now, guys. Not only that, that Jericho candle, what did that Jericho candle really do if you just zoom out? All it did was retest supply. It retested supply to see if just as I laid out earlier, right? To see if the sellers there had the conviction to add to their positions and keep price suppressed from that area. And they did. The sellers had a strong cojones in that area, and they shot price down. And what have we seen for the last 2 months? The result of that, right? The fallout from that, right? And we currently find ourselves back in another area of demand. This is the previous consolidation, i.e. redistribution area of 2018. And you can see how many times we bounced from here. 1 bounce, 2 bounce, 3 bounce, 4. 4 bounce. So we've already had our first bounce from this area a couple weeks ago. And it was very weak. And we can see now retrospectively, let's get rid of these circles that I just drew. We can see now retrospectively through the tool of the 55 weekly exponential moving average. When we broke down to the 55 EMA, consolidated for a few weeks of boring trading, pumped insanely with that Jericho candle, but that was not bullish, right? That did not establish a bullish trend, right? It was a retest of supply and a shorting opportunity, and we can see that now. And then we broke down. We broke down below the weekly 13 EMA, shorting signal, or the weekly 21 EMA, shorting signal. Here's the weekly sell signal from Waddah Attar explosion, right? And continuation short signal from Minx on the weekly right there. And you could have been targeting as your first target the 55 EMA, for example, in this scenario. But you got way more out of it. And then price retested the 55 EMA from below, rejected as resistance, right? And where do we find ourselves? In that area of demand. So let's look at the bounce that we got from this level as opposed to the first time. And again, we are obviously coming off of a lower high, right? A lower high relative to the all-time high of Bitcoin. So it is understandable in that lens that the bounce would be smaller. But still, this is pathetic, man. This is pitiful. Super pitiful. It's a pathetic bounce. Look at the weekly, man. No bullishness whatsoever. Where are the buyers in this market, guys? Where are they? Why number not go up? Because people are selling more than they're buying. Right? And until that changes, we're not in a bullish trend, right? We need to break actual significant levels. We need to actually put in significant bullish volume for a consistent period of time, as we did at the beginning of 2019, to establish a bullish trend. So, I want to make it very clear. Oh, and so now something else. What have I said for a long time now about weekly baseline crossovers and cross-unders? They confirm trends, okay? They don't get you into the first half of the trend, but they damn well get you into the last half, right? Let's go back. Let's look at the weekly. I talk about the 13 and the 55 crossover. I talk about it all the time. Now, doing the 13 and the 21 crossover is fine. That can actually get you into some really impressive movements, but it has a higher drawdown rate, right? Still profitable, but the 1355 is super decisive. It's almost never wrong. So here is the weekly 1355 crossover, right? It occurred here in May, right? Now, obviously, here's the thing. It did not get you in for all of this. You would have needed to trade on the daily or use some other form of analysis, right? Maybe just breaking above the weekly 55, which we did over here toward the end of April, right? So you had the breakup, the pump up to resistance, which I would have been really hesitant to long at that point in time, but then we consolidate, reaccumulate, and break up. Good sign. So you could have gotten this 1 month wave of the bull ride in 2019, through that method of analysis, right? And it's fairly consistent. You can backtest that. It's really, really good. And this doesn't just apply to Bitcoin. It applies to many, many things. It's simple, it's consistent, it's objective, it's easy to backtest, and it works, right? So people dog moving averages all the time, but usually those people aren't making money. And I'll tell you this, you know, so I've traded stocks on and off for a long time, right? And for a long, long time, I just used moving averages to trade stocks, right? And was fully discretionary in how I traded stocks for a long time, right? I'm far more technical and far more precise now, right? But I never had any problem making money in trading stocks. Moving averages are simple and objective, and they work. But the moving average crossover works right here. And does it get you in for the first half? No, it's not intended to. It's intended to get you in for the second half. And if you would have longed, even on the close of that weekly candle, yeah, you would have had about 13% drawdown. Who cares? It's the weekly chart. But you had maximum upside of 60%. 60%, okay? What do traditional markets return? You guys, you know, a big problem that I have with crypto traders or a lot of other traders that I talk to is they're freaking greedy and unrealistic, man. No offense. Not to you guys. You guys are great. But people will say things like, if I didn't do 5,000% with my 100x long, what am I even here for? Like, do you even percentage, bro? Like, you know, if you want to be a professional trader, understand that most professionals, highest tier level professionals in the Forex and stock markets are locking in 30% a year. And most traders would kill for that. Like, wealth is built over time. Real wealth is built over time. Nobody with millions of dollars, unless they're like, no, you know, nouveau rich, you know, dumb young money trust fund babies. Nobody with millions of dollars will even listen to you when you talk about large percentage gains like that. They don't care. When you have a significant amount of wealth, you're not interested in, at least most people aren't, right? You're more interested in preserving your wealth than taking excessive risk, right? You would rather have consistent returns over time that are real money. That's real money. So 60% with that simple strategy, pretty good, right? Pretty good. And you can lock in. Listen, I've said this before. There has not been a year in trading crypto that I personally have not doubled my crypto trading account, right? My crypto trading account. And that's because of these insane runs that we get, right? And knowing when to be spot long and knowing when to be hedge short, right? And the nice thing about being hedge short for a long time is that you're able to catch a large portion of the bearish trend, and then you often do end up exiting your short, not at the absolute bottom. That's not what we do, but you know, you can start scaling out or easing back into a long or something like that. And you have a far more of the underlying asset. In this case, if you short Bitcoin, write it down and then exit, you're going to have a lot of Bitcoin. And then for the next run, you have so much more Bitcoin to make money on. So what I wanted to talk about coming up is this weekly, it hasn't happened yet, so we'll just wait, is the weekly 1355 weekly moving average cross under, okay? It's about to occur. We're a few weeks away from it, right? And just as what we noticed, what did it signal over here? What did it signal over here? And of course, this is where it actually occurred right here. Let me make sure I get that week right. It did occur right here. It occurred that there was one last big wave left, right? And we've talked about this with other components as well. And what does it probably represent for BTC? It probably represents that there's one more big wave left, okay? So we'll talk about this more throughout the week, but I do want to now look at the level of demand below us, right? We have a similar thing down below us in a lower range, and this range is between 49.17 and 53.20. And I think this range is important because not only is there an HVN there, but you also have the weekly 200 simple moving average, which is pretty important, right? For Bitcoin anyways. It's supported price at the bottoms over here, okay? So, things to keep in mind, things to be aware of. Our monthly chart is also similarly pointing us to the exact same level. Looking at the monthly chart, we did get the sell signal from Waddah Attar explosion, the powerful sell signal, and full confirmation, the PTP sell signal on the monthly chart over here. And the very similar. What did the Waddah Attar explosion powerful signal say over here? The first powerful signal, it represented that there was a big blow off top left. Somehow this is the first time I looked at it that signal was there. It should be over here for some reason. Maybe my settings are weird. But anyways, I do know we got the monthly sell signal. We've covered this many times right here. And what did that represent? What does it likely represent? That very similar to getting the signal over here, we have a blow off. We have a blow off bottom. Conversely, as we saw a blow off top from the monthly. Okay, going down to the daily, these things can give us nice movements. And again, the monthly, all you need is one of these candles, baby. And look where our monthly 55 is. Where's our monthly 55 EMA? Actually, no, that's not a good example. That's sitting down at 43.61. That's not a good example. Let's see if the Bitstamp chart's dramatically different. Yeah, Bitstamp chart dramatically different. 5019. 5019. Sorry, that's the EMA that I wanted to reference. Sorry. So on Bitstamp, where we have a little bit more historical data, and we can smooth out the month a little bit more. We do have our monthly 55 EMA at 5019. So getting back to the Coinbase chart, where that's the only discrepancy there, that lines up very beautifully back on the weekly with that level of demand. Okay, that's where our month and average true range, which is our stop and target system, or a large part of our stop and target system, points us right there on the monthly. Right, monthly sell signal. That's where it points us. We can go down to we can see that has confirmation with the weekly 55. So our EMA structure supports it. Right. We look at our weekly overall trend supports that direction, price moving that direction, and there is a lot of significance. Now we don't know how long it'll take to get there, or there's no 100% conviction that we will get there. But that is a great target. It's a great target, and it's the one that I'm personally targeting, not only with my hedge, but longer term positional shorts. Okay. Now, did take my full risk short off from the daily today. And sorry. Did take my full risk short off, and I'm not, again, let's talk about this. So remember that we're in a bearish trend. So taking longs from this level, even though it's, it's a level of demand that hasn't broken yet, right? I would be, taking longs here is high risk. It's aggressive, right? It's high risk and aggressive, right? So we can go, so let's talk about kind of these three delineating factors. So you could be a safe conservative trader and look to only go short in bearish trends and not take longs, do not care, be hedged, and look to take put on full risk shorts, right? So in this scenario, we'd be looking for, well, your first would be if we retreated back to supply. You'd look to reshort from there. Or if you got a confirmation sell signal, right? So that's area A, or option A, to be a safe trader, is to only go short in bear markets, only go long in bull markets, et cetera, et cetera. So if that's the type of trader that you are, if you're only looking for the most conservative, highest probability setup, then you're not going to go long. Option B is going to be kind of middle of the road, right? Which is where you're actively trading and taking longs and shorts, but you are hedged in the direction of the trend, right? And this is typically where we fall into, right? The large majority of the trades that we're going to recommend are always going to be of the first nature, of the conservative nature, right? Because you are allowed to take risks with your portfolio. I am allowed to take risks with my portfolio, but my team will not take risks with your portfolio. That's not our job. Eli back, thank you so much for the $10 super chat, my friend. I cannot see what you are saying to me quite yet. I'm getting it. Eli back, king of the altcoin chart. Can you please look at the daily and 4 hour for waves? Average entry is 12,300. Thanks, Justin. Another one of our analysts is actively watching waves as well. They were in waves for a large portion of the movement. Made some good profit on that. Toma, they've also been involved in as well. And they just told me this morning that they're actively watching waves again. Now, I haven't had time to hear his full analysis on it. So I'll take a look at waves for myself for you here. I think we should probably take a break. Honestly, there's a lot more that I want to say about BTC. And I kind of want to get to the point right here. And let me finish up this point. I'm going to take a brief break. I'll come back. I'll answer Eli's question, and we'll get into the rest of the show. Maybe we'll do Q&A. But here is my overall perspective on BTC today. I'll kind of keep this short because we've been talking about this for a long time. It's been an hour of me talking about the wider picture of Bitcoin, and it's important to frame everything in that wider picture, guys. It really is. But anyways, I think if you take a long right now, it's going to be high risk. It can be. Let me rephrase that. You can take a long here. Okay, bounce target. You can take a long here. That's going to be middle risk if you do not drop your head short. So you're either going to need to structure your position in a way where you have one account, you just reduce some of your short to give you long exposure. That's fine. Again, make sure you guys go check out Trunker's Layer channel in our Discord. If you guys want a full explanation, he did a beautiful write-up of how to do this, how to hedge with multiple accounts or one account or multiple exchanges. But very, very aggressive full risk. And what I don't recommend is taking the long here and dropping your short. Okay, dropping your short. The safer, more conservative trade is if we're going to get bullish behavior, bullish activity from here, then you want to reshort at a level of supply or resistance, right? So now let's talk about PTP. Okay. So we've got a couple options here. The first one is going to be for those who have factored in reversal baseline bounces into their analysis, into their strategy. You've got the reversal baseline bounce. Alternatively, we want to wait for the daily candle to close and see if we can get a close above 69.05. Right? Then that could be a good trigger for individuals looking to take a breakout long, right? Otherwise, if you're looking to go long here, you want to, so we talked about that, right? We just talked about all these weekly structures of how price retests supply and shorting opportunities and et cetera, et cetera. If you're looking to kind of finagle your entry and get a better average entry, well, let's go look at how price kind of played out, right? We have a consolidation area. We have a little bit of an accumulation area between 6,500 and let's say 6,700. And then we have a stop loss on, right? We have a spring and then a pop, right? And we're currently at our first level of resistance, right? And what have we seen from that first level of resistance? Have we seen a big rejection? No, we haven't. Not really. Haven't seen a really big rejection yet. There's a little bit of a rejection. Price seems pretty strong right now. And I'll tell you this, when Bitcoin starts running, it tends to run. I just want to, again, perspective is what's important, right? This is not a market bottom yet. Could be, probably not, almost certainly not. But it can be a local bottom, right? So just set your sights conservatively and protect yourself. Don't get carried away just because you see a green candle, okay? You can take a long if you want to, if you have a plan to do that, and you stick to the plan, okay? Stick to the plan. PTP is obviously not signaling a long trade. PTP is the trend following system, so it's not going to catch reversal discretionary things. You're going to need personal discretion to be able to catch those trades. For those of you using Waddah explosion as an initiator, though, it is going to be giving you an exit signal. We're having a red column printing below the explosion level. That is telling you to exit the trade. The only other thing here is a potential reversal baseline bounce, which I would actually not take. Because of the tap into demand. It's too high risk, right? Reversal baseline bounces are the higher risk trade setups anyways. They're an addendum to regular pathways to profit. They're higher risk, they're aggressive. And they're inherently discretionary, right? So you can choose to or not to take a reversal baseline bounce. In this scenario, I would not because of the tap into demand. I would not into the tap into demand. Talking to one of our senior analysts this morning. He is looking at the areas between 71 and 73 as the first potential levels of resistance. That's his setup. So he's not looking to long. He's not looking to long this area. He's going to short resistance. And our other analyst is, again, looking at that $8,000 area to short from that level. Okay. Maybe that. Get all that out. All right. What a show, guys. What a show. So, using those same levels, I think if one was going to go long here, I would be looking to target those areas. Okay. I think that's a good opportunity, guys. So, let's do something here real quick. That was scary. Thought OBS was going to crash on me for a second. Okay. Let's go over. We're going to take a break, guys. So we're going to see a lot from Jason here. Let's go over and hear. I'd really like to hear what Jason's thoughts on this are. So let's go over and see what the weather's looking like in Bitcoin City with today's Bitcoin weather report. Following that, we'll have another word from Jason, and we'll have a break, and we'll be right back after that break, guys. So don't go anywhere. Get your popcorn. Maybe get your shorts on, whatever you're into, guys. And we'll see you in just a moment. We're going to get to Eli back as soon as we get back. We're going to distribute the rewards to D-Live. We've got a little bit of news to cover and your requests, guys.
Well, Justin, I'm glad you asked because, boy, we have been doing some calculations. And we have been running through this over and over and over again. And I've been using many different time frames. I've been using the 13, the 14, the 1600 second moving average, the MACD, the RSI, the Bollinger Bands, the surge tanking, everything that you'd ever imagine. And guess what? We've been doing this over and over and over. And boy, is it getting good, because guess what? All of the calculations are coming out to is we are... I don't have much else. Sorry. Back to you. Over. Boy, is it getting good.
And we're back, guys. Hopefully you're doing fantastic. Thank you for holding through the break. Let's do numero uno here and reward our viewers over here on D-Live by distributing these lemons. Oh, I got to throw some lemons in the basket. I usually do that at the beginning of the show. I didn't do it right now. Distribution is in order, sir. People caught the surge tanking. Thank you so much, Eth1 Midwest Attempts, for the lemons, my friend. You're about to get them back. And Mamunator. Mamoon-ator. Thanks so much for the follow over there on D-Live, my friend. Give me the lemons. All right, Wendy 2, ETH1, Ricky T, Solar MKD, and Hugo Chill. Big winners today. Thank you guys so much for the support. By the way, I talked to a team member during the break. It is possible, we'll take another look at it, that Ricky T actually had the closer guess. And if that is the case, Hi, Delilah. If that is the case, then we will. If that is the case, since I incorrectly said at the beginning, we will reward both of them. That's how we do it. If I screw up, you guys don't get penalized. I get penalized because we have a certain protocol for that. Which is it comes out of my pocket. Anyways, all right, let's get bankrupted me of lemons. All right, let's see here. Let's see where we're at. Sorry, guys. Oh, big announcement, guys. Listen, you guys have been waiting for it. You guys have been patient. We are premiering the interview with Silvio Macaulay, winner of the Turing Award, founder of Algorand, computer scientist, creator of Zero Knowledge Proofs, at 2:30 p.m. Central Standard Time today. So right after the show, you've got enough time to go get yourself some popcorn, come back here, make a day of it with us. We will be premiering. We'll all be there in the chat. Team will be there. The interview with Silvio Macaulay. So come join us for the interview. It's a fantastic show. It's going to be a fantastic interview. One of the highlights of my trip to San Francisco for Blockchain Week 2019. So highly looking forward to that, guys. And I'll be happy there to see it with you guys live. All right, so we've got some news that we got to go over today. All right. Our first story of the day comes to us from the Bitcoinist, right? And this is about hitBTC. And the headline is hitBTC is the longest running fraud, investigator claims. So let's give you the rundown here. So in a recent Medium blog post, Richard Sanders, who is the lead investigator at Cypherblade, which is a crypto analytics firm, he claimed that hitBTC is, quote, the longest running and potentially largest scale criminally fraudulent entity, end quote, in the crypto space. Now, according to him, while the exchange markets itself as one of the leading exchanges, they are in fact, quote, a wolf in sheep's clothing, end quote. They are likely insolvent, he claims, and they only remain operational because there are users in the space that do not perform any sort of due diligence. And he went so far as to say that, quote, hitBTC is one of many examples of entities in the blockchain industry that must be eradicated, whether via being made irrelevant by consumer choice, intervention from authorities, legal action, or some combination thereof. Now, talk of hitBTC operating a scam and preparing to exit came from the likes of John McAfee and even Trace Mayer, when earlier this year, the exchange halted withdrawals. And according to Sanders, the exchange might itself be insolvent as it has been trading with user funds. Given hitBTC's lack of transparency, along with not permitting any sort of third-party audits, Sanders attempts to estimate their solvency based on the number of hot and cold wallets that they have relative to volume. And based on this metric, hitBTC's volume is too large compared to its Bitcoin reserves based on on-chain analytics. Here are the proof of reserves. So we can see here proof of reserves in Bitcoin, hitBTC 243 Bitcoin as opposed to Kraken's 100.5 thousand, Bitrex's 125.4 thousand, and Poloniex 10.9 thousand. Right? And if we look at their trading pairs total volume over the last 24 hours, we can see that hitBTC has $537 million in total trading volume, and volume generated per one BTC reserve is 2.2 million. These numbers do not add up, whereas every other exchange is in conjunction. So you guys want to talk about wash trading. So, as we say, based on this metric, hitBTC's volume is too large compared to its Bitcoin reserves based on these on-chain analytics. Other exchanges, which do perform, Bittrex, Kraken, Poloniex, which do perform third-party audits, can have a proven measure of solvency. Now, He claims that hitBTC would never allow an audit because it would reveal their fraudulent operations. And he suggested that the insolvency of hitBTC has financed lavish lifestyles for those at the top of the hitBTC scheme. Now, previous investigations into hitBTC's volume metrics, like the one published by Bitwise, reach similar conclusions. This is not the first time that an analytics firm has made this decision regarding hitBTC. And Bitwise stated earlier this year that it is easy to show that hitBTC volume is almost entirely fake. Quote from Bitwise. Now, Bitwise research also showed that Huobi and OKEX had huge proportions of fake volume built on small, real customer bases, but hitBTC was by far the worst example. Now, furthermore, hitBTC, he claims, is also guilty of listing many crypto assets of dubious quality. This unscrupulous approach attracts valuable victims, but otherwise demonstrates a disregard for ethical operations. For example, hitBTC maintained support for BitConnect, ticker BCC, even months after problems surfaced publicly surrounding that particular scheme, which we all know to be one of the largest pump and dump pyramid schemes in cryptocurrency, Plus token being the latest and largest. In contrast, other large-scale operations like Binance never even listed BitConnect or other highly suspicious coins. Now, hitBTC is also known for its unofficial charge of $250,000 for listing, quote-unquote, shitcoins to its platform, allowing many scam projects to reach a wider audience of investors and gain a foothold on CoinMarketCap, thanks to the platform's status as a leading exchange. Basically, running an operation where you can pay to have token success. Now, in cases where these lesser coins ended in exit scams, which many of them have, hitBTC would delist the coin and offer no recourse for their users, claiming that the entity or team behind the project remained anonymous due to security reasons. hitBTC management itself operates in a similar anonymous fashion, with Sanders explaining, quote, "In reality, the hitBTC team is anonymous because when, not if, the day of reckoning comes, whether that is becoming insolvent to a level where they cannot continue the selective scam charade, or whether it is corrective actions from authorities, nobody is willing to put their identity behind a fraudulent operation." Now, hitBTC does offer a unique attraction. It requires no KYC verification procedures in combination with no withdrawal limitations either. Instead, hitBTC practices an unusual policy where they merely encourage the user to submit KYC documents to avoid eventual verification procedures that are, of course, coming in the future. I've said that for a long time. Now, this leads to what Sanders calls, quote, selective scamming, in which users will have their accounts frozen out of the blue, citing the need to complete the postponed verification. And according to Sanders, this selective scamming scheme, the tip of the tongue, the teeth, the lips, has several steps. First, hitBTC will block users from withdrawing funds and force them to open up a support ticket. And then hitBTC gives vague timelines that are then extended on several occasions, citing various excuses. During this process, users are asked to provide their ID documents, only to have hitBTC attempt to drag out the process by requesting additional information, followed by requests for more time to verify the documents submitted by the end user. Now, hitBTC continues this charade with the goal of having their victims give up, perhaps realizing that the extent of the scam is evident and abandoning their funds while trying to preserve their identity details from what they now realize are fraudsters. Now, in rare circumstances where the victim's profile is high enough, or if they raise enough noise on social media to threaten hitBTC's credibility or reputation, that platform has unlocked frozen accounts. But those lucky few are said to be in the minority. Now, Sanders is now calling for everyone in the crypto community to help end hitBTC and, quote, their perfect crime, end quote. In a recent update, the Cypherblade investigator said that hitBTC's days are currently numbered, as it is being reported that they are in a bit of panic with many users withdrawing funds and talk of the final exit scam being imminent. Now, I want to be very clear about this because I hold myself to a high standard in regards to these things, and got into I had some constructive criticism about the way that I covered the Dash situation a while ago. And I want to be very, very clear that the only reason why I didn't feel sheepish about that was because I still stand by what I say. The whole situation, regardless of how it is attempted to be painted, right? I am still not convinced that situation, it was not handled appropriately by anybody in the community, right? And it's the come out of that, the excuses that have come out of that as to why everybody that kind of threw shade on the whole situation about Dash being like, we are completely in the wrong. I just don't buy that. I don't buy that. I don't buy that at all. I don't think we were wrong whatsoever. And if we were, we helped people get their funds back potentially quicker, because that's what it seems like to me. It seems like, and I said that, so that it didn't seem like fraud. It seemed like somebody not being a very accountable human person. And you get some social media outrage, and people become accountable pretty quick. Got to get the let out. Now, I have for a long time always advised people to not trade on hitBTC. I do not trade on these scammy, low volume, wash trading, fake shitcoin listing exchanges. My capital is important to me. I have a family. I have to pay my bills. I will not entrust my crypto, my keys, to any of these risky, suspicious, shady operations, with hitBTC being the worst. I personally have traded on hitBTC back in 2017, and I hated it. And what they're talking about in this article, I have seen firsthand. Now, I am not going to make sweeping proclamations like Sander is that hitBTC is the devil, that hitBTC is a scam organization. I will say that based on everything that I've seen, it would not surprise me. It would not surprise me. Now, this is not to spread FUD. This is not to disencourage the space. It is what it is. Obviously, we're in a bearish market. We have to be cognizant that very extreme stories like this can surface when the market is very bearish. We have to be very cognizant of the effect that our words have. Me more so than most people, because I am a public figure and people do listen to me. And I thank you guys for showing up every day and listening to me rant. But I highly, 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 highly recommend that if you have funds on hitBTC, that you reconsider very, very carefully how you are trading, what you are trading, your style of trading, and encourage you to rethink that, right? Encourage you to rethink your decisions, because the exchanges that you choose to trade on are the companies that you are associating with and the companies that you choose to do business with. And if guys, listen here. Why am I in cryptocurrency in the first place? Not just to make money, that's my job, but my job does not define who I am. I am involved and I support Bitcoin because I want the world to be a better place. I want the world to be freer. I want the world to have more liberty. I want the world to be more decentralized. And I want to see all the chaos and manipulation that we see with centralized control of the money supply be eradicated from human history. That's why I'm here. A big topic that we cover so often is, do we need regulation? Like, do we need government authority, right? Do we need government authority? Do we need official legislation from governments as they currently exist to come in and clean up the space and make it safer for everybody, all right? And as I've said many, many times, and as many others in the space say, we can self-regulate. We can self-regulate. We can do this. We do not need government intervention, right? This is a chance to show the world how it can be a different place. And the only way that happens is if we make ethical decisions on a personal level, i.e., you only do business, associate, promote, support ethical companies. For example, Kraken Cryptocurrency, we get dozens of emails every single day from coin projects, exchanges, marketers, projects, whatever, asking us, trying to throw money at us to run an ad or positively mention them or recommend their service or anything like that. And how many spots have we run? How many ads do we run? How many sponsors do we have? I can count them on one hand because we only select friends of the show, legitimate, honest, ethical projects, and good people. $69.19 on the old Bitcoin, tapping above a previous high and currently getting sold into. So, the decisions we make about who we choose to associate with is important. Now, let me know what you think. Am I completely wrong? Is Sanders wrong? Is hitBTC a bastion of authenticity and credibility? And are we just spreading FUD and completely wrong? Let me know in the comments section down below or in the live chat, and I'll get to your comments, my friend. Now, talking about Lightning, is there some signs? Our second story today is coming to us from CoinDesk, which we haven't done a CoinDesk story in a while. But I want to talk about Lightning because I am a Bitcoin supporter. So let's talk about Lightning. Now, the title of today's article is Bitcoin Savvy Retailers Are Experimenting with Point of Sale Lightning Apps in 2020, which is exciting. It's really exciting. You know, there's people, it's so weird in the Lightning community or in the Bitcoin community because all you tend to hear like publicly is like from news desks, right? Typically, this is what we've heard for like the last year or so. Is Lightning gonna succeed? Lightning is struggling. No adoption for Lightning. And so all that seems to be put out there in the media is like only negative things. You don't hear positive things, right? Because all the positive things are coming from developers in the community putting their heads down and building a good project, building potentially, the second layer, building the second layer of Bitcoin. And it just blows my mind that people cannot look and see like, oh man, Bitcoin was so transformative in the way that it changed the world. But the Lightning Network will never work. That's just crazy. Like you guys are seeing development happen right in front of your eyes, and so many people are just ignoring it. But anyways, we're going to be talking about Breeze, and that is the focus of this article, which is a Lightning-ready Bitcoin wallet startup. And they just saw Charlie Lee make an investment in their company of an undisclosed size. Now, taking a look at what Breeze is working on right now, what we can see is one path for bootstrapping Lightning into the retail economy. Now, since the mobile app of Breeze launched in June, they've integrated with shopping and payment apps like Fold, MoonPay, and Bitrefill, just to name a few. According to the company data shared with CoinDesk, Breeze has made a Lightning setup that has facilitated 4,273 transactions in October alone. Now, they have a retail app that is already in beta version. Now, the Lightning Network, to be fair, is ostensibly the only practical scaling solution at this time. It's the only in development practical scaling solution that we have in front of us at this time. And it offers a way for the wider economy, the retail economy, to be able to process Bitcoin payments quickly with low fees. The issue is with the complexity of hosting a Lightning node or terminal, as well as managing multiple payment channels, particularly while the network is still, right now, in its infancy. And a certain enough of, quote, escape velocity, end quote, is required in terms of liquidity and open channels for the network to really take off. We need an injection of liquidity. Now, setups like Breeze are trying to streamline this Lightning adoption for merchants using the Escher system that they've developed. And this provides, so going back here, I want to hit that. Okay, sorry, getting back to the point here. So they want to utilize this Escher system, which is an app to provide point of sale solutions. So you swipe your card, that's point of sale, that are easy for merchants to set up and maintain with minimal headaches. Now, one business is already currently doing a beta run with this platform. It's just amazing to see that we've seen this active development, that individuals are coming up with unique solutions to push this into the retail economy, to push Bitcoin adoption. Let's see here. So according to one of the members of this company, Perrin Ellinger, quote, "We did a test run around a month and a half ago and it worked beautifully. They are the owner of the video game store Station Retro in Alabama. Quote, I'm hoping to get it integrated into the store by the end of December. So for you guys in Alabama, stop by Station Retro, buy some stuff with Lightning. Now, Ellinger said that the process is shockingly easy compared to self-custodied options for merchants. Now, his small business cannot handle Bitcoin's volatility nor on-chain fees, so the wallet itemizes purchases made with the Lightning Network signature low fees, almost free. And he just gets a statement every morning for what the Lightning transactions were, and they do a quick bank transfer to the store's account. It's almost quicker than the credit card machine. Now, this is all kind of being made possible through this company, Breeze. So they're partnering with Iterative Capital, which is a trading desk, right? So essentially, they, as we talked about, what is kind of the requirement that we need here, like an injection of liquidity, an injection of capital, because you need a certain amount of escape velocity for the network to get off ground, right? So from a Lightning app startup, Breeze, partnering with a trading desk to provide liquidity, right? The app processes the Lightning Network payments for the merchants, and the trading desk settles them into cash. Easy breezy, cotton peasy. Now, Scheinfeld is the CEO of Breeze, said they're going to be starting a pilot this month in Israel where they've been given favorable considerations to operate and test the system while they build out the on-ramps for the system for American banks. Now, of course, anyone who prefers to use self-custodied Bitcoin can also do so with Breeze. So you guys do not have to go through Iterative Capital. Now, as for onboarding those outside the U.S. banking system onto the Lightning Network, they offer Fast Bitcoins vouchers that users can redeem for Bitcoin that goes straight to their Lightning wallet. Now, let's see here. According to Fast Bitcoin's managing director, Danny Brewster, over the last 6 months, the startup alone facilitated Lightning payments worth more than 11 Bitcoin, or about $78,000 by today's prices. Perhaps that's why some Lightning fans are choosing predicting that more merchants are going to be experimenting with crypto payments in 2020. I think we are going to see more of that. And it's kind of convenient that startups like this isn't the only startup that's working on a solution like this. These are going to be compatible with a lot of Lightning wallets in 2020. Plus, Nisa, which is a British grocer, will be joining the Fast Bitcoins merchants in 2020 as well. And ending this with a quote here from the video game store owner. Bitcoin needs to move. It needs to become a currency in order for people to trust it more. I hope this encourages people to spend their Bitcoin that they otherwise would not. And again, do believe that was the point of all this, right? To create a decentralized payment network, not just to get rich, guys. So I'm always going to be excited by stuff like this. I'm always going to be supportive of development of the Lightning Network. You guys are seeing, we're seeing the second layer of Bitcoin be built in front of us, and it's absolutely amazing. All right. Now, it is getting late in the show, so I did want to talk about the EU's 5 AMLD. We're going to cover that in tomorrow's show. We're going to cover the 5 AULMD in tomorrow's show and explain that a little bit, talk about it, break it down. Let's get over to Bitcoin. Congratulations to you lucky longs out there, ladies and gentlemen. Renko just trend flipped as well. Getting a little bit of selling pressure right now. So remember, for analysis, I want to be very, very clear here because I got to get going here in a second. There's a lot out there. I got to get to Eli back, the man, the myth, the legend. So let's do that. Let's fulfill my obligations, answer questions. We are going to be closing above the daily baseline if we do close where we're at right now, ladies and gentlemen. So I want to get to today's questions, answer those, do Mr. Eli's chart for him, of course. I want you guys to remember the plan that we covered. All right, Eli back. Waves. So the first thing I always want to do is I want to go see how is Waves holding its dollar value Okay, so I believe very consistently we've talked about this with Wave. This is Waves USD, and again, reversal baseline bounce, right? That's what I talked about. Bullish chart, bullish market, not signs that we've absolutely ended yet. You don't know how long these trends will rise, so you just look for reentry opportunities at the reversal baseline. And anybody who had that nice little stank bid down there did a quick 15% today. All right, so let's go to Waves BTC. Average entry from Mr. Eli was, he wants the daily and the 4 hour for Waves. Average entry was 12,300. Okay. Now, on the daily, on the BTC chart, you wouldn't have quite grabbed the baseline. The baseline still coming in at 1,096 sats. Average entry of 12,300. Yeah, man. Here's the thing. This is not the long, and I always feel like I just do the negative things. You don't know how long these things are going to run. This is not really the long that I would want to be in. This concerns me. This is a huge sell-off, right? And a reactionary buyback. Typically, these things have some significant follow-through, right? Especially, again, we've got all the characteristics of a blow-off top. Do we have high volume, blow-off top, characteristic pattern right here, and really good volume, really good selling volume right here. So on the daily, yeah, that's pretty clear, man. Point of control right here, and I think this is very similar to what I already said a couple days ago when I looked at Waves. Point of control at 13,860, or 13,860 sats. And you can just see, beautiful. All right. And we've got a lot of supply. We've got a lot of levels of demand below us, right? So we do have one potential setup again. So basically what I hear you say is you essentially bought this level of demand, right? You were looking for, obviously price broke above these local highs, this kind of triple top pattern right here on a very beautiful bullish run, hit the point of control, rejected from it, beautifully. We've got some buy-in levels below us. We've got some levels of demand below us, which makes sense because this is an accumulation level. So we'll break this down into two different types of trades, and then I'll tell you what I would do. The safest type of setup here for me would be most likely taking profit on a trade at this point in time. And unless you're actively maneuvering with this thing on the lower time frames, as you can with altcoins, like, sell, up, buy, sell. When these things move, they tend to move. But that's a lot of volume coming into that sell side, man. So we could see, I would expect to see a little bit of consolidation and sideways, which can make trading tricky, right? The easy part, taking the run up to the upside, was easy. So I don't think I'd like to be in your position right now. You had a tradable bounce off that level of demand. Perspective is what's important here, because you do have that overhead supply. You do have that overhead point of control, that overhead level of resistance at 1386. Now, regular PTP trade was nice and beautiful here. Would have gotten you in right around here, so you would have been able to take this on the daily all the way up. Point of control acting as a good discretionary stop there, or a good discretionary end target for the other half of your position. Now, what we want to see for a real breakout trade. So sorry, let's go back. So we've got positional trades here, which means you are attempting to accumulate waves. I am not sold on a lot of these altcoins to feel comfortable doing that, right? There's only one coin that I've done that with right now. And for waves, although I kind of like waves, would not be interested in just, dollar cost averaging into a waves investment. Okay. So with that being said, I really wouldn't be interested in averaging at these levels of demand on the way down. I wouldn't be interested in averaging into these on the way down. Definitely interested in trading, though. Again, good PTP signal. That's all we're looking for on altcoins. That's typically my best setup. That's why I like trading these altcoins on the daily, because when they run, and you just get them on the daily. You have daily targets. You just take profit, and you're done with the trade, right? You don't, I could have made so much more, blah, blah, blah. You made money. The only thing that matters is if you're making money or not. And I wasn't quoting you. I don't think you say blah, blah, blah. I think you say, it's a good altcoin here, and I'm going to make money. And you seem to make, like, you are the shitcoin king, my friend. Anyways, so I don't really feel, although under regular operating conditions, for example, so if the chart was extremely bullish or if macro bullish, then I would be somewhat interested in buying retreats to demand. For right now, what I'd really like to see is price above the point of control. So we've gotten rejected from the point of control, previous distribution area that really was the originating factor. So this is the origin point, remember? Now this is less true. This is less true in crypto because you can only spot long waves. I'm not aware of any platform where you can short sell waves. So it's not like individuals are shorting there. But what we have to understand is that there are individuals. So you do see the same thing slightly different. So it's not that people shorted from here and they don't want price to go above them. People bought here, right? People bought here and they held throughout all of this, right? And they're selling at break even. And if there's enough that exit the market, then price is not going to go above this level. So I would want to be patient here. We've had a very nice run on waves. I'd really let this shake out. There will be some tradable bounces. Obviously, all of these represent a tradable bounce. In fact, I think you caught one. I think you're in one right now. But I would be, if I were in your shoes, I'd just take profit. I wouldn't want to be stuck in this position. I'd rather be patient. If we're going to keep running, then let's keep running above the point of control. Let's keep running above the point of control. This is pretty good. This is kind of like a good timeout for Mr. Waves here. Let's see if we're just going to collapse from here or if we're going to overcome the selling pressure, but that'll probably take some time. It's unlikely that we're just going to break through this. And if we do, we can just go long again. You can take the breakout long. So I don't really like this chart. I would want to be out of this chart right now. 4 hour time frame. Yeah, so we're just kind of smack dab in this level. What we'll see is some distribution. Distribution happens for a while, and then again, if it's distribution, then we'll see some big red candles coming down to the downside. Bounce nicely off that point of demand. Tradable bounces. 2 equal highs. It's a tweezer top. It's a double tweezer top actually, so that's a bearish reversal pattern. You also got a little bit of a 4 hour kind of like a head and shoulders thing going on here, and you guys know how I feel about chart patterns, but. Yeah, you got a huge volume spike, very characteristic of a blow off top. You've got Waddah explosion, which is telling you on the 4 hour to be out of trades, told you to be out right over here. So would have got you into the last. So Waddah explosion, just trading Waddah, would have got you long here, would have also got you long over here, right? So would have got you long here for this run, and then here for this run, long, and you would have been out on this candle. So caught this trend majestically, but you are now out, sir. You are now gone. If you were waiting for the color flip, you're out here. And looking at Minx, yeah, Minx is bearish. CCI is also bearish on the 4 hour. Yeah, we should be out of this trade, my friend. And if anybody says anything about a trend line, I'm gonna snap. That's called a parabola, or the beginning of, that's the left side of a parabola, not a trend line, guys. So best of luck, my friend. Thank you so much for the kind donation. Bitcoin stalling out. Okay. Jai English asks, good morning, Justin. If you were trading lower time frames, what settings would I recommend for Waddah? Default works pretty good on almost all time frames, man. You do want to play around with sensitivity, right? So if you lower sensitivity, the explosion level goes higher, and it becomes like price has to have more volume to generate a trade, i.e. you'll get less signals. You can also experiment with increasing the length, the fast length and the slow length. I suggest increasing them symmetrically. So for example, the defaults are 20 and 40. So you go up to like 50, 60 or 70, 80, right? For example. Or excuse me. The defaults are 20, 40. So you could go up to 30, 50, 50, 70, 60, 80. I would keep them symmetrical, right? But overall, I just encourage you to like get down in those lower time frames and experiment a little bit, if that's what you want to do. Bitcoin's being powerful today. NZZZ asks, do you expect that we go higher from here or down? In the short term, probably go a little higher. Again, first levels that my team is watching is 7.1, 7.3. The more important level is 8. But macro, no, we're not in a bull market. Could be. Let's break 8K. That's the level of supply. But let's break some levels first. Let's actually put in some sustained bullishness. Nice Hash asks, double bottom or fake out? Double bottom for now, for sure. And Wendy on DLive asked about PCG, Pacific Gas. Let's go take a look at PCG real quick. Nice gap and opening up on gap up on PCG. You know, I talked about this yesterday, man. I mean, we can look for the trade to 1503. It came down to the weekly 55. We've got the daily 55 crossover, so we can be buying pullbacks on PCG. We're in a bullish trend. Looking just at my system, do I have an objective signal? No, like we're right at the baseline. Down, a lot of volatility, back up to the baseline, reversal baseline short, a little bit of a lower high. So the first thing here would be looking for either an aggressive re-entry short, reversal baseline bounce, or being patient and waiting to see if we close above the baseline at 1202 and get a long signal, which we're not quite there yet. Waddah is kind of allowing us. CCI is getting there. No. I would not want to go long on this right now. I would be okay with taking the breakout confirmed by PTP, but no, sir. Not right now. Another great day of volatility. Go, go, go. All right, guys. With that being said, here's what I want you to remember. Let's go to the outro. Thank you guys, of course, for joining me for another exciting episode of Breaking Bitcoin. I've been your host, Justin Wise. You guys have been a fantastic audience. Thank you for joining me today. I want to leave you with this, right? So we see this all the time, right? So it was just yesterday and the day before that we were seeing endless red candles to the downside, right? And we were prepared for that ahead of time, okay? We were prepared for that ahead of time. We were profitable on that trade setup, and we'll do the exact same thing again with these movements, okay? Talked about the macro analysis, so please take all of that seriously and understand the different time frames when approaching the market. We're in a bearish macro trend. We're seeing a meso reaction off a level of demand, okay? We've got some potential targets to the upside. The safer option is to wait for higher prices to reshort from, because that's trading in the direction of the trend. The conventional idea is to be looking for longs, but be cloaked under a protective hedge short. And the aggressive option here is to say, this is the market bottom. I'm dropping my hedge. I'm all in on Bitcoin, and I'm going to go long. I don't recommend you do that, right? I recommend that you take the time to develop a plan, and especially, above all, look, watching green candles like that, right? There's still always going to be a part of you, right? Because it was in me. Like, I just looked over at the chart, right? And I thought to myself, man, the thing's just going to run forever. I should grab along. But it's the discipline that stops you from actually doing anything on your execution engine, right? You don't actually put that trade in. Why? Because you do not react to the market. If your trade setup didn't happen, if you develop a plan, and then so say your plan right now is you're like, you know what? If price comes back down to 6,600, I'll go long. Okay. Well, if price doesn't come down to 6,600, you don't just buy a random green candle. Develop the discipline, because It doesn't matter if you make money today. You need to make money over the long term. That's how you stay a trader. That's how you survive this game. Limit your downside and consistently set yourself up for opportunities. You're not going to catch everyone. And for those of you who caught today's movement, good on you, man. Awesome. Aggressive, risky, but it paid off. Be happy for yourselves, because with risk comes reward. All right. Listen, guys, above all, develop a plan, stick to it, and don't go chasing waterfalls. Okay. Trade safely. If you guys want to support the show, make sure to leave us a thumbs up over here on YouTube. We highly appreciate that. Give us a follow over on DLive or Twitch if you're watching on those platforms. If you guys would like to learn from our team, we are the fastest growing trading education group on the interwebs. I'm very proud to say that, guys. If you guys would like to learn our rules, utilize our tools, join our community, our growing community of traders, then you guys can research everything that we're doing on the website at premium.crackingcryptocurrency.com. You can sign up for our 1-week trial. You can experience everything that we offer to our members with no obligation to your guys' self. So we just do that so that people can get a feel of the product that we serve. We are very, very proud to be doing what I'm doing. And we have the support. We have the members that we do for a good reason. So if you guys are struggling with these concepts, then come check out what we do at premium.crackingcryptocurrency.com. Now, also would appreciate your support with the podcast. You guys can check out all the podcast stations that we're on at breakingbitcoin.money, Stitchers, Podbean, Spotify, Google Play Music, iTunes, all of them. We're all there. We're all there. And whatever you do, make sure to join us in the Discord. Links are in the description down below for everything you could possibly need. I want to thank the sponsor of today's show, Coygo. Make sure to check them out at coygo.crackingcryptocurrency.com. That's coygo.crackingcryptocurrency.com. And of course, today's crypto comment giveaway winner, our friends over at Spectre Security Coin, spectresecurity.io. Again, I've been Justin Wise. In 25 minutes, we're going to be doing a live premiere of our interview at San Francisco Blockchain Week with Silvio Macaulay, winner of the Turing Award, computer scientist, creator of Zero Knowledge Proofs, and founder of Algorand. It's a great time. I'm looking forward to seeing you guys there. Be safe, be smart, and trade safely, guys. I'll see you in tomorrow's show, because we will be back here, of course, as always, at 12 p.m. Central Standard Time, Monday through Friday. Be good, guys. I'll see you then.